Good morning. Today is the 31st of March 2026. So let's start with the big shift in the market right now. So for weeks, the focus has been on inflation, rising oil prices, supply shocks, and the central banks needing to respond. But now something is changing. The market is starting to worry less about inflation, but more about the slowdown of economic growth. Oil prices are still climbing. WTI is up nearly 4% again, and Brent is briefly touched toward $117 a barrel. Under normal circumstances, that would intensify inflation fears. But look at what is happening elsewhere. US equities are slightly down and European market rose about 1%. And most importantly, the bond yield fell across the board. That is a key signal that falling yield suggests investors think the higher rate plus higher oil, which lead to weaker economic growth ahead. Recent comments from the Federal Reserve suggest that the oil shock is being seen as temporary and supply-driven. If the central banks believe the inflation is coming from the supply, they are less likely to aggressively hike rate. And in fact, the market are already starting to press the possibility of the rate cut down the track. So which way are we moving? Are we going to have a rate cut or rate rise? Let's bring it back to Australia. The government has just announced a temporary tax cut on fuel. So in theory, that should reduce the petrol price by around 26 cents a liter. But there is a complication. Supply risks are nowadays a lot higher. If the global oil supply tighten up further, tax cut won't stop price from rising, so it is just a buffer. Meanwhile, in the currency market, the Japanese yen has been volatile. It briefly weakened past the key level before rebounding, as officials hinted a possible intervention. The key issue here is not how weak the Japanese yen is, it is how fast it is falling. And traditionally, Japan heavily relies on import energy, and higher oil price may add further pressure. Finally, the geopolitics remain a major wild card. Tension in the Middle East continues, and shipping disruptions are emerging, and uncertainty is still very high. The market may be showing a temporary optimism, but the underlying risks haven't gone away. So, to wrap it up, yes, the inflation is still a concern, but increasingly, market is asking a different question. Will the hawkish monetary policy and higher energy costs push the economic growth to slow down? That's it for today. I will see you tomorrow.